Have you ever pondered about transforming a mere $10 into a whopping $10,000 through stock market trading? This question stirs the imagination of many. But what does it really mean to trade in the stock market? Think of it as a bustling marketplace where shares of public companies are bought and sold. Every transaction is a bet on a company's future. Buy a stock and you're wagering the company will thrive. Sell and you're betting it will falter. But here's the catch. It's not a casino. It's not a place to make quick money based on luck alone. Instead, it's a game of analysis and strategy. It requires understanding a company's fundamentals, scrutinizing market trends, and making calculated decisions. So while turning $10 into $10,000 might sound magical, it's far from a simple trick. Stock market trading isn't magic, but a game of analysis and strategy. Why is proper analysis so important in stock market trading? Well, imagine you've just stepped into a labyrinth. The twists and turns are unpredictable, and each decision could lead you to either a dead end or the treasure you're seeking. This is what the stock market can feel like without proper analysis. In the world of stock trading, analysis is the map that guides you through the labyrinth. It's not just about numbers and percentages. It's about understanding trends, evaluating companies, and making informed decisions. There are two common methods of analysis: technical and fundamental. Technical analysis is like trying to predict the weather. It's all about spotting patterns and trends in stock prices. It's about looking at past data to forecast future performance. It's about finding the right time to buy or sell. Fundamental analysis, on the other hand, is like taking a deep dive into a company's health. It's about assessing a company's financial statements, understanding its competitive landscape, and evaluating its management team. It's about figuring out the company's true value and whether its stock is overpriced or underpriced. Both types of analysis are crucial to making informed trading decisions. Without them, you're essentially gambling, relying on luck rather than strategy. So as you embark on your stock market journey, remember your analysis isn't just a tool, it's your compass. It's your guiding light. It's your key to unlocking the labyrinth. Remember, in the stock market, your analysis is your best guide. How much does luck play a part in stock market trading? That's a question many beginners ask, and the answer is not as straightforward as one might think. Yes, luck can occasionally lead to profits, but it's like catching lightning in a bottle, unpredictable and fleeting. Relying solely on luck is akin to gambling, and in the long run, it's a losing game. The stock market is not a lottery, it's a field of study. It requires knowledge, skill, and patience. Understanding market trends, company fundamentals, and economic indicators is what truly drives successful trading. So, while a lucky break might give you a boost, it's your strategic analysis that will sustain you. Luck may smile on you once, but it's your knowledge and analysis that keeps you in the game. Ever seen those flashy thumbnails promising millions in earnings each month? They certainly catch your eye, don't they? But let's pull back the curtain on these grand claims. Yes, the stock market has the potential for substantial earnings. However, it's not as simple as clicking a button and watching the money roll in. It requires a deep understanding of market trends, investment strategies, and financial analysis. It's a constant learning process. So be cautious of those who claim to have a secret formula. They're often more interested in your wallet than your success. Ensure you're learning from reliable, credible sources. The stock market can provide substantial earnings, but it's not a magic money tree. It demands dedication, analysis, and patience.